Years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
And welcome back to NinjaTrader Live. I'm your host, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our NinjaTrader ecosystem partners so that they can share their expertise with you. And today we have returning to Traders Workshop, our very good friend, Tiru Nagapan, Master of the Markets. How you doing?
Very good, Tom. Good to be back on the show once again.
Oh, my pleasure. It's always great to have you on and have a great conversation with you. It's been a couple weeks. I know we have a great topic today, but I want to let you, kind of have anything you want to say before we get into the topic.
Nothing much. I just realized that I had got these wireless microphones, right? I still haven't set it up yet. I thought it would have been better rather than this old headset. But we usually do it just so that the voice comes out clear and crisp. But yeah, I'll hopefully get that sorted for next time. As I told you, it's just been really rushed off our feet over here at Master the Markets. Just a lot of events coming up, a lot of planning. We've got an annual summit coming up as well.
Oh, that's
the training program for SDA. Yeah, it's quite a lot. Yeah,
it's good to be busy, right?
Yeah, true. Yes.
Well, you sound great. Like you're coming in, loud and clear, and the headsets, I think they might become, making a comeback, and it's the cool thing to do now. So you're proof.
Thanks for that, Tom. Yes.
Sure. So Great topic today.
Thank you.
So we're talking about multiple time frames, and you might know some people might refer to it as fractal analysis. That's the fancy way of saying looking at different time frames. But love to hear your take on it, because you bring such a methodical and practical look at data, not just the markets, but data of the markets. So curious to see, how do you blend that with multiple time frame analysis?
Yeah, let's go for it. Let's go on to. I was taking a look before we got in, was the crude oil chart. So we
Sure.
can take a look at that in real time. Let me just maximize that. As you were saying about fractal, yeah, that's actually a quite cool way of saying it, isn't it? Rather than multiple time frame. It just made me realize, the same thing you can say in different words, but suddenly it just catches fire. It's the same thing with veganism, right? Before you used to say, oh yeah, I don't eat dairy stuff and all that.
Right.
But then
right.
once
Right.
they introduced the vegan, it's like, hey, that's trendy. I want to be a vegan as well.
Well, it's a very specific description, right? I mean, you know what you're talking about when you say that, right? Fractal analysis, veganism, that just kind of tightens it up, and you can move on. And instead of people asking you questions about what do you mean, well, you find out what it means.
Yes, absolutely. Yes, that's right. Let me just put on the cross thing. Yes, over here. There we go. We got it all sorted now. Right. So today, multiple time frame fractals, what do you call it? Whatever is trendy for you, you can call that. So the first thing is, I think we did talk about this in the last session. It's a nice build-up what we are seeing as we're doing it, Tom, is that on the highest time frame, what we talked about last time was on the weekly, you look at the direction and the setup. Okay, that on the highest time frame, we look for that. There's a direction we're taking on what direction are we going to take the trade in, and then the other one is a setup pattern on the highest time frame. Then on the middle time frame, we said that in the last session, we said take a look at timing. When are you going to start preparing yourself? So if you start thinking of get set, ready, and go, so the weekly will be get set, and then this one will be ready, so which is timing, right? And then the final one on the lowest time frame you can do on the 4-hour in this example here is confirmation. When I get set to go, I put my money where my mouth is, right? I start to take the trade in. Now, of course, I mean, for people watching in, doesn't mean we need to take weekly, daily, and 4-hour. These are just principles I'm showing. We can also do it on daily, 4-hour, 1 hour. We can even do it 1 hour, 15 minute, 5 minute.
Sure.
But I just thought it would be a bit more easier if we start off with the higher time frames to get the concepts.
Now that right, and so the longer the time frame, I typically think, what type of trader am I? When we start weekly, daily, 4 hours, that might be more of a swing trade, right? Because of the timing. 4 hours. Well, there's what in regular hours for the stock market, it's what, 6.5, 7.5. So, that, yeah, 6.5 hours. So 4-hour chart doesn't cut it. But if you're a day trader and you want to get in and out of the market, that 60-15-1 or 60-15-5 might be better for you.
So, yeah, absolutely. And I just want the viewers to understand that whatever I show on these higher time frames is just principles, and you can apply the same principles on the lower time frames as well. I think with that, let's go a bit deeper in. For some of you, I know some of you might be saying, oh, I missed the previous ones. The good part is it's both on, let me just bring it to this screen over here. So the good part is it's on NinjaTrader channel as well. It's also on our MasterTheMarkets YouTube channel, youtube.com/MasterTheMarkets. And the boys have nicely consolidated all our interviews together, Tom. So
oh, nice.
And there you go. So all the 9 videos are all there. We're getting more and more popular, as you can see.
There you go.
Right. So they can catch up on that if some of the things they're not sure of, or the terminologies. So for today, let's go on and see how we can dissect this further. So the highest time frame, I start off with the weekly, starts with our direction and setup. Okay. So over here, with the smart money framework and the structure that we've done over here, as you can see, all we have done just as a recap, we have quantified our tops and bottoms over here. So the bottom is the blue arrow with the blue dot. So that bottom got confirmed by this confirmation bar. And the top got confirmed by the orange arrow by this orange dot, which is the confirmation bar for the top. Now, once you've done that, so that's the first step. I think we've talked about this before. Once you've quantified your tops and bottoms, you get what we call the market structure. Now, what do I mean by market structure? Basically, I can now just draw a line diagram, right? Connect all the orange arrows to the blue arrows. And from there, I can easily say what trend it is and what phase it is in as well, without any guesswork. It's just a quantified structured framework. It is not the Holy Grail, but it's a quantified framework. Now, from the market structure, once you've quantified the tops and bottoms, and the formulas were given to us by the quant traders who started this work back in the 1960s. And from there, from the market structure, then you get 4 data points, right? So the 4 data points are, you get the trend and phase, which we have also coded, which you can see over here, right? And then you also get the 3 stats, which is the OE stats, which you have looked at, how much move is left. Then the other one that you get to take a look at is the MAE, which is how much does it go against you before it goes to your target. And the last one is time 2. Now, we have covered all of this in the previous session, so the viewers can take a look at our previous videos and interviews that we have done. So today, I want to show how using market structure, we can get set, ready, and go, right? Using multiple time frames, or the cool word, as I learned from you, the fractal way of approach, right? Okay, I don't want to become a dinosaur. That's what it is, Tom. I just got to keep out all the cool words, all right?
You're far from a dinosaur, Tira.
That's good. Right. So now coming on back. So on the weekly time frame. So what's the trend? What's the phase? So if I again convert that into a line diagram, you can see that for more better visibility, it looks like this, right? It's done 2 cycles. So this is 1 cycle, right? With a bottom, with a top and a bottom and a top. That's 1 cycle. And then there's another cycle here. And once we got 2 cycles, we can easily determine the trend, because that's where the usual thing comes, where this is a lower low in reference to this low. And at the moment, this potential top, which I've put a question mark here, it's a lower high, possible lower high, but as of now, it's a lower high compared to this reference high. Now, because I got the framework, I can say in a quantified way rather than making it subjective. Because if I don't have this, then it becomes subjective. Some people might say, you know, that's not a top, that's a top, that's not a bottom, and all that, right? So it's just a quantitative way of looking at it, where it makes our data a bit valid in the way that we take a look at, and also then to see the robustness of our strategy as well later on as we construct it. So in terms of this, at the moment on crude oil, so this is in a downtrend, what it's showing you here. And in terms of the phase, right? So as you and I know, nothing moves in a straight line. It will start to revert back at some point. So even in a trend, what we have is one part which is going alignment with the trend, which we call the phase 1. And then the other one, which we covered in the last video, is the phase 2, where the pullback is. So at the moment, crude oil is here at phase 2, downtrend phase 2, right? Because it's a pullback, the bottom is confirmed. Right now, if the trend sustains, okay, now here's where we start to look at strategy construction and setups. Now, if the trend sustains, you and I know that it won't take out the last high, okay, and it will start to turn down, which is what it's doing on its first big seller bar over there. And if it carries on further down with its selling, at some point our formulas will kick in, and if it confirms it, then the orange arrow and the orange dot happens, which then confirms that the downtrend phase 2 has turned into a downtrend phase 1. Okay, so that is how the premise of our setup actually happens, and the direction. So in this possible multiple time frame strategy, a simple multiple time frame strategy is, I look on the highest time frame, I look for a trend, I look for a phase 2, which is what we got if I take away that seller bar here, which is what I got as of last week. I got a phase 2. Okay, now once I got that set up, once the phase 2 has been confirmed by that bottom there, so after that bar, I can start to look at potential trades to take. Now, what am I then starting to take a look at? So I remind the viewers again. So the weekly, the highest time frame is looked for direction and for setup pattern. So the setup pattern, what we are taking a look here is the downtrend phase 2. And in an uptrend, it will be the opposite. It will be uptrend phase 2. So that's our setup pattern that we will take a look at. Now, the next thing is, and the direction is, of course, because it's a downtrend, I'm going to take a look at the downside. Now, from that point onwards, Tom, when I go lower into the lower time frame on the daily, right? All I'm looking for now is if this top over here, as of last week, this one where I've put in weekly potential top, this level here, right? That one there, which is at level, what level? 78.39 roughly, right? On the high side of that. Will that high hold, right, for selling to further continue and then finally confirm it with an orange arrow and an orange dot? So that's the premise why now we are going to go drop into a lower time frame to take a look at.
Oh, okay.
Right?
So Tiro, real quick, and this all makes complete sense, right? We want to trade with the overall direction, so we need to know what that direction is. But each direction there can be rallies or pullbacks depending on the are we bullish or bearish? So we want to know the phase. Once you have that question, is this a potential top, right? Let's anticipate that. And maybe this is where you're getting with the daily. So maybe I'm stepping ahead, but can we anticipate a price level that will say, you know what, that was a potential top. We're confirming it at this level. And maybe it's too early. Maybe the next week is too early, and I'm open to that. And if we break down below this level, it's pretty, according to our analysis, it's pretty sure that that's a good direction for your trade. I'm going to set that table because that's the way my mind works.
Absolutely. I think you're absolutely right on that. Yeah. So we are looking at which part, I mean, some people, when they don't take a look at the overall trend, they would just think when they go to the lower time frame, oh, it's a rally, it's in an uptrend, right? On the lower time frames. But however, when they put all the different time frames together, they'll start to say, you know what, yes, on the lower time frame it's an uptrend, but on the higher time frame, I just got to be careful that it's still in a downtrend phase 2. That rally I'm seeing on the lower time frame is part of a downtrend phase 2 move on a higher time frame. So when you put all that together, you also manage your expectations on how far you want to run that long on the lower time frame.
Got it.
And also, if you do it in another way around, which is a top-down approach, then you can look to capture a potential top becoming a confirmed top from the highest time frame further down, right?
Right.
So that's the whole idea of this. So once we got the setup, I'll go on to the daily now. Then what we are taking a look at is, as I mentioned in the last session we had together, the first sign of weakness on a vertical bar chart, and my mentor told me this last time, it was quite very subtle, very simple, right? And most of us will know what I'm going to say right now. But it was so powerful. He said the first sign on a chart, on a vertical bar chart, and most of us are looking at vertical bar charts, right? The only way of the first sign of weakness on a vertical bar chart is if the next bar takes out the previous day's low, right? Or the previous bar's low, whichever time frame that you are looking at. In this case, we are looking at a daily. So if it takes out the previous bar's low, that's when you will have the first sign of weakness. And we call that actually, so as I showed over here, when you got the first bar that takes out the previous bar's low, we call that a primary bar. The primary initial move to set the weakness in motion, basically, right? Because that's the only way that it can technically then go stronger into more weakness, basically. That's the primary, that's the first step by taking out the previous bar's low. Right, so based on that, so let me correlate that now. So on the weekly, I was taking a look on how to use the replay thing on NinjaTrader, but I just found out that my technology is not that great. So I just thought I'll do it in this way. So over here, if you can see, that was on, let me just move that here, and then we will correlate it. So that was on the 4th of October. This is on the 11th. So we got the confirmation, the bottom confirmation that the phase 2, the setup pattern on the 4th, which ends off on the 10th or the 11th of October. So if I go now to the daily now, so if I then were to then correlate that, so basically on the 10th, there we go. So from this bar onwards, right, is when I can start to take a look at a sign of weakness for that potential top becoming a confirmed top on the weekly time frame.
Got it. Yep.
Right. So
Yep.
I will hide all of that. Right. So this is where we are beginning off with. Okay. So from this point onwards. So I will then start to see if on the lower time frame, now I'll drop down to the 4-hour, whether we are
Tiro,
getting.
can you do a favor? Can you jump into the chart and turn on crosshairs?
Crosshair. Yeah, I've got the crosshair.
Yeah, there we go. Okay. All right.
So
Awesome.
there we go. Right. So over here,
Perfect.
what I'm taking a look at is if the low of this previous bar gets taken out on the next day. So now let's take a look at that. The next day, no, it doesn't, right? It goes up more further. No sign of weakness yet. And over here, again, no sign of weakness. So we keep following it like that. And to help us do that, let me just draw another horizontal line here. Let me do this. So yeah, horizontal line there. And then there we go. And let me see if I can put that maybe as another orange, maybe thing. Let me just put another one there, medium or magnet. And then this one, I can do it dash here, apply. There we go. Right. So we are tracking it now because if it takes out that low, then there we go. Then we get a primary setup, the first sign of weakness on a vertical bar chart. So that's what we are looking at on the daily in terms of timing, right? So now when I move on to the 4-hour chart, so to make it a bit more easier, so you see on the next bar itself, we have the outsider bar. So now let me go on the 4-hour now. Let me just get the date to correlate with that. It's 10th, 7th of October. So over here on the 4-hour, and I'm also going to mention how the volume comes into this as well. And here, if I'm not wrong, I look at the data series, right?
Yeah, you'll pull in more days, exactly.
So I will do that. And then we'll put a few more as well. There we go, 20, let's say, apply. And there we go. I think that should be good. So that, if I'm not wrong, so let me look at that here. So if I'm taking a look over here, so that's on the 8th of October. So that's on the 10th. So it's from this point onwards, isn't it? So I got the Magneta line here. So let me just pull all that. Oh, I can't hide it that much because I don't have much data, isn't it? Let me just hide that away. So if people can't see any of this, right? So let me just scribble all that off away. So in real time, what would have happened is, so I got my daily low marked out, right? Which is the Magneta line from the daily time frame.
Yep.
In terms of timing. And the 4-hour, what I'm really looking for, Tom, is that one, I've now got a 4-hour top confirmation which came on this bar, right? The question is that 4-hour top, that orange dot, going to sustain, going to hold itself at that price level of 78.59? And then is that going to then form a daily orange dot, a daily top, and then eventually going to become a weekly orange dot or weekly top? So in the essence of what I just said of last time was, ripple, swell, ripple, wave, and swell, right? The swell is bigger than the wave. That's what I remembered.
Right.
So anyway, yeah. So the ripple, wave, and then swell. So the ripple is the 4-hour, the orange dot, becoming the 4-hour top, becoming the daily top, the wave, and then finally the weekly top. That's how we have done the whole logic, right? Starting from the higher time frame, top to down. So once I get that, the question really is now, is that 4-hour top going to hold to become the daily top, which is the second part? But to help me guide in that, and I don't get stopped out on many trades, what I do is I also wait for the daily low, which is, as I said, for the daily low to be taken out, because in vertical bars, that's the only way you can show the first sign of weakness, which is what we got here on the pink line. And then we got that over there. So only when that happens, so we don't enter it on a close, but when that happens, then we start to put a pending order after I get a top confirmation on the 4 hour. I put a pending order for this magneto line. Then I've got two now confirmed. The 4 hour top not only has confirmed, but I've got an additional confirmation that the daily low has been taken out as well. Okay.
So that daily low, we're not necessarily looking to put in a short order at the low. We're waiting for that daily low to confirm the 4 hour top or the daily top.
The 4 hour top
The 4 hour
plus
top.
plus the daily low level being broken. That's
Yes.
what.
Right.
So the daily low level, right? The previous bar's daily was 73.53.
Right.
Just as we saw just now, right? So all I've done is, as the daily was going towards the upside, I have marked my low of that daily bar, which is by the magneto line. And then I've dropped down to the 4 hour to see if I'm getting any top confirmations. Not only that, plus break that daily bar's low, previous bar's low as well.
Got
Okay. So once I've got that, then I can start to take an entry. Now, there are different ways to take an entry. One way is, yes, I can enter on this level that is broken on the daily with a 4 hour top confirmation. And my stop can be towards the over here at 78.5. And then I'm running it all the way down. That's one way of entry. Another way, a conservative of entry, which is what Trade Guider and the team does, is also combining that with volume to see if that top is going to sustain itself, to pull itself further through the different time frames as well. And the other thing then we then do is also then wait for a test, just like what it's done, or wait for a trend change. So the first test happened by this one here. So what we got over here is something like this, where it made a lower high, as you can see, right over here.
That's weakness.
Exactly, right?
Yep.
So that's another way of second possible entry on conservative entry, where you can wait for a lower high sign of weakness and then start to enter. Now, if you want a bit more confirmation, then what you then do is wait for the trend change to occur on the 4 hour. And according to the market structure here, all it's showing you here, which I'm drawing this one here onwards. So if you take a look at that one there, it's looking like this. And when it breaks that neckline, that will be a confirmed downtrend. That's another way of entry as well. So there are different ways of entry, but finally, in recap, what all that we are doing over here, Tom, is if you successfully capture that 4 hour top, you can see that that 4 hour top became a daily top over here. So we got the second part, right? So you can have a small pat on the shoulder. You know, I've got one part of the market structure, right? The 4 hour top is held to become a daily top. Now, if you really got it right, then the weekly in the weeks to come should drop further. And at some point, the weekly orange dot should happen as well. So in final summary, as I would say, is that weekly for direction and setup, and with market structure, it becomes a bit more clearer, right? And then after that, daily is for timing, and then the 4 hour is for confirmation. And when you use the volume as well, you can definitely get more reliable setups. And as I said, you can do this on any type of time frame. I just showed it on this time frames just to make it a bit more simpler. I think another one that I had, after you've got that, then you can always use your open equity data, which we have shown before, right? Once I got the weekly dot then confirm, then I can use the OE data on that weekly time frame, right? And then I can choose the 50% data, but from the point of the confirmation bar happening. So as you can see, even on the simple example, I've entered it on a 4 hour dot. I'm writing so much open equity move. And when the weekly dot then happens, then I'm taking more open equity from there. So that's how the real big professionals trade and take so much move out of the trend in a very systematic, methodological, structured manner, which is validated by data as well.
Tiro, awesome. This has been great. I have a question for you, a little off script.
Yeah.
I was asked yesterday about where do I think oil will go by the end of the year, and while I didn't have a target, I said I think we can make year's lows by the end of the year. Is there anything here that kind of helps you with targeting? Is this more finding the inflection points and looking at where it could go, trend change, or do we have with that OE data? It's okay. It's more about probability of getting
Exactly.
100-point move, 200-point move, that kind of thing.
I think the first thing we always say, because of the market structure, Tom, we can get probability stats. So if let's say even this bar itself, let's say confirms, right, at the end of this week, okay? Now,
Yep.
from the close of that bar, I can refer back to this open equity table over here and then see how far it can move, right?
Mm-hmm.
So, I mean, this I got only a daily ones on here. I don't have the weekly stats over here, but on the daily or the weekly, if you imagine this is the weekly, I can see that there's a 50% chance you'll get to 180R. And usually on the phase one moves, this will be a bit more. There's a 60% chance, right?
It's more extensive. Right?
Exactly, because you're
Extends the
trading in
trend.
line with the trend,
Yeah.
and you will get there more. That's one way, and you can combine also this also with your swing lows as well. So like you mentioned, first swing low to break is there. That's something I would look at. The second one and the third one over here. This is where, I mean, to see how far it can move, one, you can use the probability stats. The second thing also then use the fundamentals combined with that to see on a macroscopic level, is there some supply demand issues that it can drive the crude oil even more further. When combined with that, then your levels will become more stronger.
Awesome. Tiru, thanks. We've run up against time. Where can people find you to extend the discussion?
The best way I will always say, which I've always talked about, which is the first thing is 7 steps to CTP.com, which is over here. They can get the 7-day video course that will explain everything, all about it in a very systematic manner. This is how we got invited to quite a few places, and now we've been invited to the Society of Technical Analysis also to write their automation training program as well. So I highly recommend everyone to go and watch this. A lot of research has been put into this, and it will help them in whatever strategy that they are trading on.
Great. Tiru, always great to have you on the show. We'll see you in a couple weeks, and want to wish everything the best for you in London.
Thank you so much, Tom. Good to be here back again. Thank you.
All right. We're going to take a quick break. We'll be back with the one and only Tanya Trades. Stay tuned.